Good evening, folks. My name is John Needham. I'm going to be your host for today. We're right at the appointed hour to start, and I just still got a few people coming in. We're going to have a reasonably large crowd today, so we'll bear with me for a minute or two. Could one of you guests please give me a sound check? Can you hear me all right? Okay, yeah, that's it. Good. All right. Well, welcome to the Danielcode. We have a nice mixed group of people today. We have, as usual, quite a good bunch of Danielcode members who know some of this stuff. Others are new to us for the first time, and we bid you a special welcome. It's midday in New Zealand, middle of summer, bright sun. I know most of you guys are in the States where it's been pretty awful, but we have people from all around the world today. So welcome to our guests from Australia and India, where Akshay's got up at 4 o'clock in the morning to catch this webinar. We're going to run through all I want to talk to you about the trade program, or as much as we can get through in this session. Now, we are going to start having a webinar every fortnight. And it will always be on the Wednesday. So over the next couple of weeks, we'll get through some of the products that we have to offer you, and then we'll move on to more general topics of trading, and periodically we'll have a webinar where there's nothing but question and answer, so you can get all of your questions dealt with. I know that we always seem to get caught at the end of, oh, Kent, sunny in Colorado. I think I saw even Pete Kilman might be here with us today. Are you there, Pete? Very nice to have Pete. He's an important man to us. We'll be telling you more about Pete's company, Trade Navigator, and how they do so much with the Danielcode. Anyway, moving on, folks. Welcome, and let's get started. So today's topic is the trade program. We've had it for a while. This has been available on the website in one form or another for a year or so, maybe a bit longer. And this is the heart of the Danielcode trading program. This is where we make the money. And if we're not making money, we lose interest in our trading pretty quickly. So it's essential that we get to the main part of this and show you how this works and what it can do for you. The Danielcode is primarily a 1 to 10 day trading system in futures and forex. We trade the US equity indices, all of them. We trade gold and silver, oil and T-bonds, grains, and 15 forex pairs. Now, for those of you who haven't yet traded forex, I suggest that you make an effort to do so because it's a very, very much more adaptable product. Particularly the way margins have been going on the futures contracts. They're getting very, very large. You need a pretty substantial account to trade futures, but you can trade forex with far smaller accounts, particularly since they bought out the mini contracts. And that's a great help for people who are either starting to trade or have a smaller account. I put the results up here now for you to see, and there'll be a couple of minutes lag on these sheets. And if you hear me talking about something, it's because I'm 6,000 miles away from you at the other side of the world, and it just takes a while to come through. But I like to get the results out in front of you early to keep your interest, because this is what we have achieved in the last 12 months, and this is what you are aiming to achieve. You know, it's the show me the money question, isn't it? And you can see over that last 12 months there, these results were kept independently for us by Dave Hunt. We had 857 winning trades, 144 losing trades, and then to finesse that, we actually started to run an account in our DC live trade room, which we no longer have available, but that ran for 7 months. In that trade room, the account was traded before a large number of Danielcode members. So we have lots of people here and at the website who can say, yes, I saw this all being done actually in real time, and I know that what Needham says is correct. And in that live trade room account, it started at $100,000 at the end of June last year, and finished the end of December at $151,757. So it gave us a return of 7.4% for that month, but more importantly, it gave us an average of 7.29% return per month. That's not per year, that's 7.29% per month for the 6 months that was running. And the Sharpe ratio on that, for those of you with a technical bent, it was 4.55%. The main point about that is that you can't talk about your results without drawdowns. Now, everyone in this business says, yeah, I can handle the drawdowns. The truth is nobody can. People have a few losing trades and lose faith and stop following the program. The worst month we had in the whole 12 months was October last year, which those of you trading would know is just characterized by endless outside bars, which we do trade, but we trade them as a defensive mechanism, not as a really so much as a money-making program. We'd be happier if we never saw an outside bar. But in the month of October, our drawdown was $58 on a $122,000 account, and that's the biggest drawdown that the Danielcode has ever had. So you can see that it's very much a defensive, excuse me, a defensive strategy. And why it does so well is because it doesn't have big drawdowns, and you have to be able to eliminate those drawdowns from your account if you're going to get that equity curve building up and exponentially, and that's exactly what the Danielcode does. I'm now showing you the first part of where we're going to go to look for the Danielcode trading signals. This is a screen capture of the Danielcode website. I have a few more you'll see over on the left here. When I get my spotlight, you'll see over on the left here we have the sidebar menu, which tells you everything that you need to know about what is where. I have a few more on mine than you will have, because I have access to some other programs on the website. But basically, the programs start with this tab here that's called TO3 Plus, and that is where I post the daily signals. And once the daily signals are posted, these yellow boxes on the right-hand top side will light up. Normally they're grey and they'll say pending. Once the signals are posted, they go yellow, and the signals are initially displayed in this form as you see in this blue screenshot here. And you'll see that we list which are the markets for which you're going to have trade signals for today, and then we classify them with various headings, some of which will appear to be nonsense to you, but you'll rapidly become familiar with them. And that is because these signals have different qualities. TO3s and blue line signals, as an example, are reversals. They are always against the operating trend. And because of that, we need to use fairly severe stop-loss protocols. The daily buys and the daily sells can be reversals, or they can be continuations, and we'll show you how we identify that later on. And then we have inside bar signals, and these have very specific entry protocols, which is why we show them that way in particular. Our next screenshot is going to be, let's see if we can get it to change. No, it'll change. Here we are. The main point about the Danielcode signals is that different types of trades have different entries and different rules. This is very much a rules-based system, and not all trades are equal, and how you handle them is different. So we classify the trades that I will post for you every day. These trades, incidentally, are posted usually about 3 hours after the US markets close. I get my data download about 2 hours after US markets close normally, and it takes about an hour to run those through the various programs that we use to create these signals. So they'll come back classified as reversals, continuations, and threes, and reversals are referred to with an R, continuations with a C, and threes with a 3. Now, each of these trade types has its own stop-loss protocol, which ultimately determines the exit. It's the stop-losses that control when you get out. We do have a first target as well, which we use on two types of trades, the blue line trades and the TO3s. They're both reversal trades. And as I mentioned before, inside bar trades have their own specific entry protocol. They're very interesting creatures inside bars, and they're also very damaging. That's what ruins these stochastics. At the end of this program, I will show you how you can have a trial of the Danielcode library in Trade Navigator, which is the studies that we use, and in there's some stochastics which have some interesting properties. Particularly, they ignore inside bars, and inside bars are the cause of, excuse me, the vast majority of errors that are made by stochastic entries. So once you've got the signals and you know what you want to trade for the day, look at all the decisions you've got to make. You've got to decide which market, whether it's a buy or sell, what's the entry price, what's the initial stop loss, what's the risk in dollars and percent. Remember, it's very important that we manage risk. We have to equalize all these trades because we don't know which of the trades are going to be the winners and the losers, nor do we know which ones will be the big winners and the little winners. So we have to manage our risk so that each trade creates exactly the same risk in our account. And that way we're not trying to pick particular trades as bigger or smaller than others. Over a period of time, you must be able to equalize the risk in your account on every single trade, and that's one of these questions here that's very important. You have to be able to manage that risk so that it does comply with your risk management structures. Then we have to know what are the targets once we're in a trade, when and how do I move the stops, when and how do I exit, and then we have the question of correlations, which I'm thumping all the time at the Danielcode. People who are members of the Danielcode know all about correlations. Those of you who are new visitors to us today may not know so much. And there are different sorts of market correlations. The first form of correlation, of course, is the direct correlation, where you have, let us say, a gold and a silver trade on the same day. Now, those markets are highly correlated. The odds are that if one is a winner, they will both be winners, and if one is a loser, they will both be losers. Now, the correlation says nothing about quantum, but it says a great deal about direction, and about 98% of the time you will see those two markets moving in the same direction. And the Huey, which is it's an index, you can't actually trade it with futures, you can only trade it with options. It's an index of the 25 unhedged gold producers. That we cover because it's a proxy for gold and silver. And when you get a signal in Huey, you can validly execute it in gold or in silver. And if you have a signal in gold, you can execute it in silver. So some of these market correlations are so strong that you can actually take a signal and execute it in another market. These are called D2 or derived data signals. The next one is the DX, which is the US dollar index, and it's correlated in all sorts of ways, both directly and inversely. For example, if you've got, if you're trading Forex and futures and you have a trade in the DX and currencies in futures that have the US dollar as part of them, that component will go the same way. So they are correlated. Nearly all the time, the US dollar index works inversely to gold and silver. That is, dollar down, gold up, and vice versa. So nearly all the time, if you have a signal in DX, you can execute the alternate signal the other way in gold or in silver. Now, that hasn't been happening lately. We're in one of those periods where those two markets have gone into what's called a linear correlation. That is, they are both moving in the same direction. If you're interested in this stuff, I've written an article about it. You can see at the Danielcode website, which we'll look at later. There's a great host of articles that I've written and had published, and that's one of them. It's very interesting because once they fall out of their inverse correlation, the direct correlation has never gone on for more than 3 months, and it always ends with a very, very big move in one of those two markets. So Never and always are words that you don't usually hear in trading, but if you know something is a very, very high probability, you've got an edge on the rest of the crowd, and it's something to look out for. Similarly with US equities, the Dow, the S&P, Russell and NASDAQ, and the German DAX, although a little bit less so now, but certainly in all of the US equities, those markets are all highly correlated. A signal in the Russell that is elected is almost certain to be elected also in the S&P and the NASDAQ. That is, those markets tend to go in the same direction, which means if you have alternate trades in, let us say, the S&P and the Russell, you need to be aware that those markets are so highly correlated that the probabilities are they will both be winners or both be losers, which means you need to cut down the amount of risk and exposure you have to each of those trades. A little known correlation is that the Australian SICOM, which is the Australian Share Price Index, it's the sort of equivalent of the S&P on the 200 largest companies in Australia. It has a night session called SICOM, and that correlates very, very highly with the S&P. What you need to know about signals, it'll take you years and years to learn this stuff, and we try to teach it to you as we go all the time. But the main concept is that all of these signals have an element of time in them. Time and price are the same thing on different axes. I know that's hard for many of you to understand, but if you look at this chart, you will see that we have a 44 time cycle there. That's on the time axis, and then at the same time we had a 44 price cycle here, which was on the price axis. And where they met at that point, of course, you got a market turn. And we see that happening again and again. The low that came in here in the US dollar, this is the DX US dollar index, came at a 62-week cycle in time and an 89 cycle on the Danielcode. Now, all of these numbers I'm showing you are proprietary numbers to the Danielcode. These are the numbers at which markets actually turn. They are not Fibonacci numbers. Some of them are close to some of the Fibonacci numbers, which is why the Fibonacci numbers sometimes appear to work in a general fashion. And that's because a couple of them are close to Danielcode numbers, but Danielcode numbers are exact. They were invented about 1,300 years before Mr. Fibonacci saw the face of the earth, and you will see if you follow the Danielcode members charts that all markets turn at these Danielcode numbers, and sometimes, very often, it's just a variance of a tick or two. It's quite extraordinary to see what happens there. When we look at these charts, you'll see all these timing charts are under the recent trading tab. These are published free for you, and I'm trying to get across to people that market timing is doable if you know how to do it. I've never seen anyone else do it properly, but if you're interested, I've written about it in great detail. It's in my articles under the article called Masterclass. It's about time, and there's another one, Masterclass Timing Gold, and gold's particular number is 44. All markets have their own vibration and respond to those. If you see the S&P chart in that tab, you will see that every single turn on the S&P since the lows in 2009, which we called to the day and 2 ticks, has been exactly at a Danielcode number. So I've used gold here to show you how the Danielcode trade program signals work. I know a lot of you are interested in gold, some as investors, some as traders. It's a marvelous trading market, incidentally. As you can see from here, the Danielcode trade program doesn't miss many signals, and the more volatility there is, the better this program works for us. So we can look now at the actual Danielcode trade program. This is what it looks like. We haven't got it to change yet in the, there we are, it's changed now. What you're looking at now, this is the actual Danielcode trade program. It lives under this tab in the website, and once the signals are posted, you've gone to your TO3 Plus to see what the signals are, and the next thing you'll do is go to this Danielcode trade program. Now, It's quite a marvelous invention, I must say, and it's been developed over time. We've added bits and pieces to make it easier for people to use. And we talked earlier about all of those decisions that traders have to make: which market, buy or sell, entry, stop, how do I trade it, when do I move my stop, when do I exit. And this program actually answers all of those questions for you. You'll see it starts off with a contract listing. It then tells you what that market is. Some of the contract codes excuse me, are a bit obscure. It tells you whether today we have a buy or sell signal in that market. It gives you the exact entry to the tick. None of this here, there or somewhere. We have exact and precise entries. It tells you where to put your initial stop loss, and this is what we call the stop on entry. It then tells you where our first target is. For some of these trades, we're interested in the first target because we actually move our stop when they get to the first target. The next column is called Stop Loss and Exit Protocols, and in there all of these trades are designated as C, R, or 3. They're the 3 types of trades that we have, and there are specific rules. You can see them down the bottom here as to how you trade each of those trades, and I'm going to show them to you in more detail in a minute. Most importantly, the Danielcode trade program knows which markets are correlated and to what degree they're correlated. It doesn't do the D2 defined derived data correlation. So if it has a signal in Huey, it does not create a signal in gold and silver. That part you have to do yourself, but we may be able to add that in a later version. But for all other trades, it knows what the degree of correlation is. It will tell you whether they are correlated or not, and it will automatically adjust the number of contracts that it's recommending to you to take account of those correlations. In here at the top, we have a box that says account value. In there, you enter your account value. Whether that's your real account or your practice account makes no difference. And the next box down is the risk value. We recommend you take no more than 1 or 2%. Now, we have an average of about 4 or 5 trades a day. We have signals for 8, 10, sometimes up to 16 trades. They're not all elected. Elected is a very specific protocol in the Danielcode. But you can have 5 or 6 or 7 trades elected and be in them all at once. So you can see that your 1 or 2% correlated risk value is actually a lot higher than it appears to be. Once you fill that in, we then go and ask it to calculate the contracts, and it will come up with a number of suggestions as to the contracts that define risk. It will tell you what it suggests you take in the number of contracts to stay inside the risk parameters that you have entered. So you'll then just run down this column here, which will open up for you, and pop in the number of contracts you want to take. You don't have to take them all. Some of you will only want to trade futures. Some of you will only want to trade Forex. And wherever possible, these have been reduced to the mini contract. If there is a mini contract, that's what it's showing you. So it's quite user-friendly, you'll find. The next column is the margin. It'll tell you what the margin is in futures contracts. And our friend Jerry Winter tries to keep that up to date for us. Does a great job. And then with the final column, it will tell you the total risk value sold. And in there, it will show you the exact dollar value of the risk on entry that you are taking for each trade. And it will also give you the percentages. And that is then complying with everything you need to know to be a successful trader. This is what it looks like once it opens up. Don't try and trade any of these signals. This is just a proxy to show you. And you can see that for the 15th, there were all of these signals here. And let's look at some of the things that happened. It tells you what the contract is here. The contract number, if you're not sure what they mean, it's described next to it in the market. It tells you whether it's a buy or sell signal. It tells you exactly what your entry is to the tick, and it tells you where your initial stop loss goes. The next thing it tells you is the first target, and if it has in the next column an R next to it, the letter R. That means it's a reversal, and at the first target we're going to move our stop. If we have a C there, that means it's a continuation, and we use a far less aggressive stop loss protocol. We want to let those trades have plenty of time to develop, and some of those trades will go for 10 or 12 days. The code 3 means it's a in-between sort of trade. It has characteristics of a reversal and characteristics of a continuation, and they have their own protocol as well, which I'm going to show you. You'll see with the correlations here that the trade program knows which of these markets are correlated, and it's done all the correlations for you, and it's now recommending to you how many contracts you can take in each one of those markets within your risk that you told it, which was 2%. So you can go ahead and you can type in here which are the markets you wish to take, and then when we click the recalculate button, you will see that it will spit out what those actual risk on each trade is. So these are the specific rules that we have for the trade program. I won't spend too much time on them because they are in the trade program. They're printed right underneath the DC trade program for you to see. But we have these 3 different types of trades. In R, for reversal trades, we enter at the trade program number, we place our initial stop loss where we're told. When the market reaches the first target, we take off half our position and move the stop on the balance of the position to break even. Now that's because these are counter trend trades, and the most common counter trend is 1 day. In a trending market, markets will only correct 1 to 3 days, and the most common correction is 1 day. So we're very aggressive about our stop loss management in here, and we want to get that stop to break even as soon as possible. We then, on the balance of our position, we exit at the first profitable close on the daily chart, and if you are trading only 1 contract, you of course can't take off half your position, so you ignore that, but at the first target you move your stop to break even and exit on the first profitable close. So that's the protocol that we use for reversal trades. They're all absolutely specific. All of the numbers are created for you, and so is the risk. The next type of contract trade we have is a C. That's a continuation. For those trades, you enter where the trade program suggests. You put your initial stop where it suggests, and you then track the blue line or %K. Now that's the faster line on the fast stochastic, which is the 533. This is a special stochastic that is proprietary to the Danielcode. If you haven't got it, you can please contact Terry at support@thedanielcode.com, and he will arrange for Trade Navigator to furnish the Danielcode library, which lives within the Trade Navigator charting program, and you'll be able to track that first stochastic. And how we run these continuation trades, we maintain a 2-bar trailing stop. So if we were long, that would be the lowest low of the last 2 days. Make sure we're talking about completed daily bars. And we keep moving that stop until the %K becomes overbought or oversold if we're short. And we then move to a 1-bar stop on the daily chart, and you will eventually be stopped out. And some of those trades are quite fabulous. The other type of trade is a 3 trade, a 3-3 actually. It's called 3s in the program. And that tends to be a counter trend trade, and that's a real simple one. You just enter where it tells you to, place your stop where it tells you to, and you don't move your stop, you just exit at the first profitable close. And for all of these strategies, you can, if you wish, add a trailing stop. This is a example, as soon as it comes up for you, which is now, this is an example of a TO3 signal. These are reversal signals. This happens to be COMEX gold. This was the reversal signal that we got right at the recent April high. That's rather the 44-week high. And you'll get the TO3 signal. These are posted the night before, about 3 hours after the market's closed. You don't have to look at the open the next day. You don't have to look at any of that stuff. These signals are complete as soon as the previous day's trading is finished. So that was a type of a TO3 signal. You can see the major trend here was up, so it's a reversal. It's against the major trend. That's the definition of a TO3 signal. They are all reversals. Blue lines, DC blue line signals, are a type of T3. They are also reversals. This chart happens to be the Nifty, which is the big stock index in Mumbai, the Mumbai Stock Exchange in India, and I put this in actually because I know you're up and about and watching this, and you'll see that recently we had, this is very recent, we had a blue line buy signal in Nifty, which had been hard down for a long time. The trend is down, 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 down. This bar here that had its low within about 3 or 4 ticks of that Danielcode blue line, and that's the target recognition. That is a prerequisite for the Danielcode blue line signals. Now, a lot of this stuff, it might sound complex. It will take you a while to pick it up, and that's exactly why we provide this trade program to you. I've been doing this for a long time and teaching people to trade for many, many years. And the thing I found in common is if you have a bit of success, you make a little bit of money, you'll be as keen as can be, and you'll really stick with it and persevere. Too many people come into this game and they try to get a grip on it. They don't have any success, or they trade without direction. They lose money and they lose heart, and that's the end of them. So by using this Danielcode trade program, you'll be on the right side of a very highly percentage winning system. 86% of these trades are winners. So this is the definition of a blue line trade. They work exactly the same as the TO3 signals. You move your stop to break even and then exit first profitable close. Now, of course, that's only the basic way of trading, and there are more advanced ways that I teach you at tutorials. But if we can get you to the stage that you're making 86% of your trades are winners, and you're making around 7% or a little more each month, you're going to be very, very keen traders, and you're going to spend the time to really learn this stuff and get very good at it, and that is my aim. This is an example of the threes or 3-3 signal. You can see that it has some characteristics of both those other ones in this market. The trend was up there and the trend is down here, and we got a couple of bars rally up, so this was not really clear what the trend was, which is why it created a 3-3 signal. In this case, we sold for the inside bar. We sold the low of this day. We have to wait for a first profitable close. We didn't get it on the day of entry. In fact, it closed way up here and looked horrible. The next day it closed down here, still didn't give us our first profitable close, and this day down here, which is, I think, probably Monday or maybe Tuesday, gave us the first profitable close where we exited. So those are the 3 different strategies that we have for dealing with these types of trades. This is the mini. This is an example of the continuation signals, and you can see once you get trending markets, the continuation signals just go on and on and on and on. This is actually a GMAT chart. This is a very advanced form of trading that I teach at tutorials, but I just want to use it for this example to show you how many continuation signals there were in this run-up in the S&P from December till now. It's just gone on and on and on, punctuated by only really 2 significant reversals, both of which, of course, came at Danielcode sell signals. I'm not suggesting that the website gets furnished with all of those continuation signals, but they are just examples that I want to show you that are clear. And a lot of them, as you can see, are key reversal bars, but don't get hung up on that. Key reversal bars themselves are not good indicators of future price action. That's the formal part of this, folks. We're going to have a bit of time for questions and answers, but do please write down the numbers on the screen at the moment. If you would like to talk about your Danielcode membership and have access to the Danielcode trade program that we're going to show you now live, call Dan or Jerry at 312-588-0016 or email them at subscription@thedanielcode.com. We can arrange for you a free trial of the Trade Navigator charting software and data. which is what I use. I've been using it for a very long time. That actually is the program that runs our Genie Auto Trade program, which I will talk to you about at the next webinar. You will find when you're creating these signals for your entries in the trade program, they are quite a lot of work when we have a lot of signals, and for that reason we've created, or our partners Trade Navigator rather have created for us, the Genie Auto Trade system, and that is going to be released next week. So the next webinar in a fortnight I'll be talking to you about that. You do need that, you can manage with a normal stochastic, but you'll do better with this stuff if you have the Danielcode library, which is a collection of studies and stochastics and other information that Trade Navigator have developed for us. And if you call Terry he's in Canada, but I think it's the US number, call Terry on 260-918-0155 or email him at support@thedanielcode.com. He will arrange for you to have a free trial of Trade Navigator and to have access to the Danielcode library, which will certainly help you with your trading. It's quite good, some of that stuff. So Dan or Jerry, 312-588-0016, or call Terry at support 260-918-0155. So let's now move past the presentation stage, and let me take you and show you what this stuff does. So we can get rid of that for the moment, and that, and that, and we should now be able to bring up our Trade Navigator and our Danielcode. Where is our Danielcode? No, not there. Here we are. Okay, this is the Danielcode website, www.thedanielcode.com, and you can see it now. On the left-hand side down here are the various menu bars that I talked to you about. Over on the top right-hand side is the indicator of when the signals have been posted. These signals will go yellow and when the new signals are posted. And on this front page, which is the news page, I have postings and things that you need to know, and also I post some of my articles there. In these headings here, you'll see that under articles we have 70 or 75 odd articles that I've had published. They're all about trading. You may be interested in those. We have a large number of videos all about trading, and you will certainly benefit by going through those. We have PowerPoints, FAQs. These are the trading reports I referred to earlier, and these are put up usually on a weekly basis. Sometimes it takes me as long as 10 days to catch up, but you will see by going through those that every turn in the, here's our most recent one, I'm due for a new one today. Every turn in the S&P has come at a Danielcode time cycle. I know that a lot of you are very interested in market timing. This is the only way I would submit to you that you are ever going to see it done properly. All of these time cycles have been on these charts weeks and sometimes months and months in advance. This happens to be the S&P, which runs on a 59 cycle, but don't forget these are Danielcode weeks. They are not your normal weeks as you think of them, so unless you read the masterclass article you won't be able to match this up. Here's gold, and I think that is really interesting. The 44-week cycle, which is the gold's number 44, is what has caused the present pullback in gold. So they're all there. There's literally dozens of them. Dollar index we do in there, bonds, oil, what else have we got? Euro, USD. It's one of the heathen markets. It works on 70, which is a heathen number. But you can see all these major turns. We call these weeks and weeks in advance, and they're quite sensational. So if you're interested in market timing, you'll find it all in there. What we're really interested in today is the trade program, so I'm going to take you there to show it to you. You remember we said we started off with the TO3 plus signals, and that told us what the signals were for the day and gave us some description of them. And from there, we now go to the trade program. And down here underneath it are the notes, which I suggest you read. They tell you how to trade all of these different types of signals. It's just as we've gone through. R's for reversal, C's for continuation, 3's for threes. This is how you enter, this is how you move your stop, etc. So you have to do only two things here. You enter in your account value, whatever it is, and you put in your risk percentage, 1 or 2%. We suggest no more. Having done that, you click on this button that says calculate contracts at defined risk, and it will open up, and you will see it is now telling you which were all of the markets for the day, and some of these signals carry forward for 2 or 3 days if they're not elected, and the trade program knows that, and it will continue to carry them forward until they are either elected or they lapse. They all have a specific time period for which they are valid. So let's have a look at this. Here's our Aussie JPY. We are told it's a sell signal. We're going to enter at 83.24 on stop. We just put the order straight there. The stop loss goes at 83.82. Now the genie knows the first target. It tells you this, the trade program rather. This is a reversal trade, so we're going to be aggressive with our stop loss management. And it is suggesting for this combination of an $80,000 contract and 2% risk that we can take 6 contracts in that market. It is, of course, correlated. Here's a JPY. Again, it's correlated with that, isn't it? You've got JPY on both sides of that trade. So that is a correlated market. So it's essentially halved the number of contracts it's recommending. So let us say we want to take 6 in that market and we want to take 3 in this market. Let's say we also want to trade equities. Let's say we want to take 1 contract in oil and let's have a contract in bonds. Now once you've done that, you press this button here which says calculate total value sold, and you will see now that it has done all the work for you. It's told you that if you take that many contracts in the Aussie JPY, these are mini contracts, your value at your total risk on entry is going to be $379 in that market. Your total risk on the CAD Chief entry is going to be $429. Down here it shows you the margins for the futures, and it tells you if you take this position in crude, if you enter at that price with your stop at that price, the trade program has calculated the difference between the entry and the stop loss, and it's multiplied it by the tick value, and that is a 1,980 risk on entry on that contract. So how we control our risk, the usual way is to say, oh, that's too big, let's put the stop somewhere else. We don't do that because that's not valid. There are only certain places where stops are valid. The most common one and the truest one is at daily highs and daily lows. With the absence of the Danielcode numbers, there are no other valid support and resistance numbers on charts except daily highs and daily lows. So we know where our entry has to be and we know where our stop has to be. So to adjust the risk, what we do is we adjust the number of contracts. So if we get that part of it right, we'll finish up always having the right risk involved. So just on these samples here, you can see that this is our total risk if all of these signals are elected, and that risk would be a total of 4.89. So these 2 contracts here have been grouped together as one, as half of one because they're correlated. These have been whole positions. So let's ask it now to reset, and we can go through and do that again. And let's say we've got a smaller contract size, and now you can do this in 4x down to about $10,000, probably the smallest size account you need. So let's just say now we're interested in taking 4x trades because they are far more suitable for smaller accounts. You'll see that we're going through pretty well, rounding up what's in the 4x markets here. and let's put them all in. One for him and two. That'll do it. And then let us go now and ask the trade program to do all those calculations for us. And it does them instantly. And it now tells you that these are these numbers of contracts. This is the risk on each individual entry. It's telling you down here what are the different protocols, how you're going to move your stops, when you're going to move your stops. These are different types of entries. That's a reversal. That's a reversal. That C means continuation. These are reversals. That's a 3-3. And down here at the bottom, underneath, it tells you exactly how to move your stop losses and how to handle your exit. So much as is possible, we've put in place all the shortcuts that you need to start trading. This takes the vast majority of the work and the calculation out for you. We do it all for you inside the trade program. And for those who want even more automation, in the next fortnight, we're going to talk about the Danielcode Genie, which is an auto trade program that runs exactly off the trade program, just as I've shown you, but it actually creates the orders for you. So that's how that works, and I think we'll probably go now to take some questions from you. Let's get rid of this and see if we can recoup our question box here, and let's see what questions we've got for you. Okay, let's see what we got here. Can you go over what percentage you currently use for retracements? I wasn't aware that you use a 62.5% retracement, but I noticed it the other day. Sure, let's do that. You will see, those of you who've done a tutorial will understand that the first ratio that comes out of the 1335 number in the Danielcode is 8, and we divide markets into 8 to get our first group of support and resistance numbers. They work very well on stocks, incidentally, but futures and spot forex don't use the 8 unless there's no momentum, in which case they will often just park the markets there. On the right-hand side here, you should be able to see that there's a small hedgehog. And our hedgehog, that's Dan the hedgehog. He's our symbol at the Danielcode for reasons that Daryl knows about. It's quite interesting. And this is the Danielcode retracement tool. It's part of the Danielcode trade library. If you're a Danielcode member, you can get all this free from Trade Navigator, and we'll just right-click on this to open it up, and you'll see that here are all the Danielcode ratios, and these are the ones that are most commonly used. These are the levels to which markets will retrace, depending on which swing is being corrected. For this, we've used the main swing, which runs all the way from this high to this low. But there are, of course, other swings. There's one swing to there, one swing to there, and one swing to there. So these are the numbers to which markets will retrace. There used to be in here, and I can't understand why it's not, the other default number is 62.5, and when markets don't adopt the 59.3, that's this one here, they will go to 62.5. Now that's the number that's very close to the Fibonacci number at 61.8, and that's the only reason that Fibonacci numbers appear to work, because they're close to the real numbers, which are the Danielcode retracements. When floor traders and market makers do not know what to do with the market, they will usually park it at 50% or 62.5. And that's what it's there for. When you see it retrace to 62.5, you're pretty well on notice that it's not a genuine move, and that the market makers and folks are confused. Let me see what other questions I can ask here. Is Trade Navigator Silver okay for the Danielcode? Look, I don't really know. I think it is, but give them a call. You'll see at the Danielcode website on the contact page under here, contact us. You'll see that we have all of the phone numbers for the people who you will be involved with. Terry Knight runs our website. He looks after any problems you have with access and problems with the website. The people at Trade Navigator, there's Melissa Stevenson. She's sales. Renee Adcock does training. If you have Trade Navigator and you want some one-on-one training, it's a marvelous offer from Trade Navigator that Renee will give you a one-on-one training session, and she's also done the Danielcode tutorial. She knows a lot of that stuff. But either Renee or Melissa or anyone at the help desk, Eric Seltz is the guru that Pete's appointed to be the prime contact man for Genie and Trade Navigator, but anyone at the help desk will answer you that. I think the answer is yes. Excuse me. I think any version of Trade Navigator is fine, but someone else will be able to tell you that. Let's have a look. Where are we here? Let's see if we can find some more questions for you. So I've gone over those percentages. That 62.5% is a default number. It's not usually used. Will the Trade Navigator library eventually have the capability to place the DC blue lines on our charts? We actually have that capability now. We've talked about that a lot, and the question has not quite been resolved, and let me explain why. There's a certain transfer of knowledge that comes from that hand-eye transfer. So we have people who say, I really like to put the numbers on the charts myself because it you know, teaches me about how these markets are going, and I love to see the numbers, markets turning at the Danielcode blue lines. And other people who say, look, they're a complete and utter nuisance, we should do it automatically. So I guess the verdict, the jury is out on that. Yes, we can do it, and I'm sure once we get finished with our Genie launch and Trade Navigator has a little more time to spare on us, we can return to that issue. So keep that on the boiler. We probably can. Can you expound on the measures used to distinguish between a reversal and continuation? Okay, you've seen that. Continuations are trades that go with the trend. Reversals are markets to go against the trend. Just looking at, as an example, this chart that we have with us here, the trend here is up, higher highs, higher lows. Starts from about there, so anywhere in this run you will be looking for continuations. They are reasonably simple trades. It's the reversals here and here and possibly even here that are the trades that are harder to get, and they're much harder to trade. I love them because my fascination is with where markets turn, and that's how the Danielcode started. I would get very frustrated about markets turning and say, now, why did it turn there? There must be some logical reason. And nobody seemed to know what that logical reason was. And after I'd spent a small fortune on learning and learning other people's work and their writings and tutorials, I sat down one day with just a clean sheet of paper and said, if we're going to find out where markets turn, I've got to do this myself. And I sat there and stared at the screen for the best part of 2 years until I started to see what makes markets turn. And what makes markets turn is the Danielcode. And it's the Danielcode blue lines and red lines and black lines. And you'll see if you go into the forum, even very seasoned members continue to be amazed how these markets are controlled by the Danielcode. So reversals are against the operating trend. Continuations are with the operating trend. Have we analyzed historical results by category, determine relative profitability? No, we haven't. work we've done takes all the signals as one. I personally don't think there's any bias on the percentages of success. There is, of course, a bias on the quantum because some of those big continuation signals really do very well, make a lot of money. Why do I use the 057 and not the 067 charts? The 067 charts are fakes, okay? Somebody's saying here that indicator calculations need 067. No, they don't. 067s are fakes. They are back-adjusted charts. Trade Navigator do them for some reason I'm not aware of, but what they are doing is they are adjusting the rollover contract for either the premium or, if it's a contango, the negative of the next contract, and they are doing a mathematical adjustment to create the prices so that they all fit in without the premium showing the gap. I don't know who thought of that. I know it's very popular, and I have no idea what the benefit of it is because it actually gives you incorrect numbers on your historical data. You don't need to do that. You should be able to be aware of what is the front month. The 057 continuous contracts are just a lazy man's tool. If you're trading futures, you should always know what is the front month and what is the rollover time, and you should be onto the new contract, which will be the March or the June or whatever the contract is, before you get there. But 067s, don't use them. You're not getting the right price. Can the Trade Navigator program generate the signals? No, the signals are generated in the Danielcode trade program, what we've been talking about today and what I've been showing you. All the signals are generated in the Danielcode website. The auto trade genie then comes from Trade Navigator and sucks out those signals and feeds it into the genie. We'll talk about that next week, but the short answer is no, the signals are actually created inside the Danielcode website. 8-watt GAN used and are extremely misused. Well, that's because they don't work. And fib numbers are nonsense. That's quite right. Couldn't agree with you more. 8s generally don't work. Look, they used to work very well on stocks in GAN's day, but remember, those stocks were very, very slow-moving markets. They have the only application that we use them for is that if you see a market parked at a 62.5 in futures or spot forex, it means there is no valid momentum, and the market makers have just put it there. I'm not using Genie. Can I get? This is Richard. Specialized help for how to submit all orders, trigger stops for each trade. Yes, of course you can. Go with Richard if you want to submit them. Create the orders manually and submit them. Renee Adcock will be more than happy to take you through the creation of TradeSense orders in Trade Navigator. And if you contact her, you can arrange a one-on-one coaching session with her, and she will show you the mechanics of doing that if you wish to do it manually. Thank you, Richard. He likes our discipline. Why do Forex bars on Trade Navigator close at 21.59? Why not OO, GMT, or something else? Look, I'm glad you raised that. That's Peter, John Peter. If you're going to trade Forex, you need to have Trade Navigator charts, and there's a simple reason for that. To my knowledge, Trade Navigator is the only charting program that runs its Forex on the correct time. Now, spot Forex is an international market. It started off mainly as a European invention, and it's now migrating its way to the States. Excuse me. It's the fastest growing market in the world precisely because you can trade mini contracts in there, and that's $1 a tick, normal big size contracts are $10 a tick. So you can trade that, as we saw on the Trade Navigator, with very small risk, very small margin. And, you know, most people start off with a very small account. Some people who don't know the Danielcode never have anything but a small account if they've got one at all. But it's the appeal of being able to use a much smaller account. You know, as small as, look, I've got clients who trade Forex, mini Forex on $3,000 accounts and manage it very well. I think that's a bit too light. I'd be happier to see you with 5 or 8 or 1,000, something like that. But it can be done. But here's the point. Forex starts at 2200 GMT, that's Greenwich Mean Time, which never changes, and it ends the daily bar at 21:59. That's just 1 minute before, and it never changes. Almost all the charting programs that do have GMT available, you can put, I think TradeStation, you can push over to GMT, but they don't understand that GMT doesn't change. So when England, GMT is Greenwich Mean Time. It's the zero line of longitude that runs through Greenwich Observatory in England near London. So with those ones, when London goes on to summertime, they change the time on the program, and that just ruins it completely. The only Forex program, charting program that I've ever seen that runs Forex on the correct time is Trade Navigator. So if you haven't got it and you want to trade Forex, you're going to be completely lost. Get it. Terry can arrange a free trial for you, or you can go to the Danielcode website, and you'll see over here on the right-hand side, we have their logo here, Trade Navigator free trial. If you click on that, that will set you up. That will go to Trade Navigator, and they will give you a free trial. If you want, there is another one. If you want to contact Terry, he has a link where if you are going to try to have a free trial of the Genie, then you will need the Trade Navigator program and the Danielcode library and the Genie. So better to talk to Terry on that point. Let's see, where were we next on? We were talking about questions. So that's why Forex bars do that. How much does the Genie cost? Talk to Jerry or Dan, please. They've got various packages for the product. Depends on how long you want to buy it for, etc. Will a recording be available? Haha. Look, let me tell you, Mike. This is the first time I've actually run a recording or a webinar myself. Normally, the guys at Trade Navigator do it for us very well, or one of my technical guys do it. Unfortunately, no one was available today, so I'm doing this myself. I can tell you that I have remembered to press the start recording button, so the answer is, in theory, yes, but I can tell you that with anything electronic, if I get too close to it, it seems to stop. So we'll certainly try. We think it'll be all right. Is the 3-3 trade the 3-bar setup? No, it's not a 3-bar setup. It's just called 3-3s. It's just a code for something I use. Akshay, can John walk us through a recent trading example of a continuation and reversal setup? Show us how the stop loss is set and then trailed and stopped out. Sure, I can. Let's have a look at one that you're familiar with. Let's go to the Nifty. This is the Mumbai Exchange. Akshay is a broker with Darashaw Brothers, the oldest and most respected firm in Mumbai. Have a huge client list. This here was a reversal trade. This was a blue line trade, Akshay, that you're looking at now. And it was posted the day before, so I hope you got it. So you bought that one tick or 2 ticks above the previous bar. The trade program tells you exactly where to do it. It doesn't do it on the Nifty because we don't actually get the data very well. There are some problems getting data from India, but in everything else, the trade program tells you where to buy. So on this particular trade, you bought at the high of the previous bar. When it got to its first target, you took off half your position and you exited the first profitable close. That's because this is a high-risk trade. This is a reversal trade. If we had, let's try and see something where we've got an oscillator. Oscillating will be a help for us. Okay, here's a good one. This is Euro USD. And the trend of this market is obviously down. We had a T3 sell down there. Let's change our stochastic here. We don't want that one. We want this one here, and down it goes. So this is now our 533 stochastic, what we call the fast stochastic. And this is a Danielcode stochastic specially designed for us. You can get it. It's in the Danielcode library. All members have access to this stuff free. So we had our sell signal there, and it went down 2 days. It then rallied 2 days, and we put a continuation signal in here somewhere. Let's look down here. This is going to give us a better example. If we were long, if this was a key reversal bar, if we got long in here, we're now looking at the blue line on the stochastic. That's the %K. That's always the fastest. Now, all of my indicators are in blue or red, and these stochastics are in blue and red. And there's a very important technical reason for that. So you should all have your charts looking exactly the same. And that important technical reason is that I'm colorblind and I can only see blue or red. So that's why these ones are blue or red. So when this bar was completed, actually we look at our stochastic and we see that it's way down. It's just coming out of the oversold zone. So we're using a 2-bar trailing stop all the way up. Now, 2-bar trailing stop means it's below the lowest low of the last 2 completed bars. So when this bar was completed, on which you can see the cursor, then the stop was underneath the previous bar. So the lowest low of the last 2 bars. And onward we go. And at this stage here, you can see that the fast stochastic has now got overbought. It's moved up to 91. That is the signal for us to move our stop loss up to a 1-bar trailing stop, which means we then, as this bar completes, we put our stop a few ticks underneath this bar here. That's January the 14th, and we're stopped out on the next day. Okay, so that's how that works. 2-bar trailing stop until it gets overbought or oversold, and then we go to a 1-bar trailing stop. David, London changes twice a year. Yes, they have a thing called London summertime, but we do not. That does not affect GMT. Is it possible to have a free something? I can't see the rest of that question, Mike. Yes, if you talk to Jerry or Dan, they'll arrange something for you. Are most of our clients trading off daily bars only? Yes. Is the profitability much higher anticipating signals in intraday? No, it's not. We do have some intraday trading techniques, some of which I teach at tutorials, but the problem with intraday trading techniques is you are always at risk of committing one of the 7 deadly sins of trading, and the one I'm referring to is trading an inside bar. Once you take these early anticipatory entries, you are by definition starting to take a trade that is at that stage an inside bar, and a lot of them stay inside bars, and no, you don't make nearly as much money. The maximum return that you can get from trading, as far as I know, is from the Danielcode trading daily bars. One of the reasons that is so profitable is, don't forget that because our trades tend to be 1 to 3 days long, with some of them going 10 or 11 days, we're turning over our money much more often. Whereas if you get caught up in that buy and hold nonsense, you are only getting the utilization out of your money once. We have it many, many times. Subscription costs, same questions here. Talk to Jerry, please. Let me see if we've got any other questions here. They seem to be about all. They all seem much the same here. Subscription costs, talk to Jerry or Dan. If you want a free trial, talk to Jerry or Dan. I've shown you the trail stops. Yeah, time conversation. Yes, we're going to post this. Let me see what else we got. Yes, we've answered that question, Richard, about getting specialized help. Renee Adcock can show you how to use the Trade Navigator to do essentially what the Genie does. All right, that seems to be about all the questions we've got. Yes, please have it recorded. We'll do that. Someone's lost audio. It's coming back. No sound. Oh, no. Sounds good. Sounds good. Okay, folks, I think that's probably about it. We seem to have answered most of your questions. A lot of them are similar. If there are any more that need answering, type them to me now so I can see them, because from what I'm looking at, I've answered all of your questions here, or most of them. A lot of them are similar. Oh, here we are. Someone's audio is restored. That's good. Thanks a million. Someone said you guys have enjoyed it. What broker do you use in Navigator? Is Navigator a broker? No, it's not. The Genie and Trade Navigator will connect to the back end of a large number of programs, of trading programs, markets. We use PFG, and we use them for the simple reason that their Forex prices most nearly match the Trade Navigator prices, which is what we're creating our signals from now. With Forex, there's no central exchange. So if you guys are trading futures, of course, you get exactly the same signals, or you get exactly the same prices as everyone else gets, because they go through a central exchange. In Forex, there's no central exchange. And the trading platforms create their own prices, and depending which group of banks they're getting their prices from, excuse me, they can be quite significantly different, and some of them are. And the other issue is the spread. Forex brokers make their money through the spread, the difference between the bid and the ask. Now, we know that. We're quite happy for other people to make money if they're providing a service, as long as it's reasonable. But it is essential that the company providing the service be able to hold that spread somewhere near it where it should be for 24 hours. And some of them are horrors. The worst Forex platform that I've ever come across is FX. And we have had clients who've gone into trades with 5 and 6 and 7 tick spreads, and they have blown out to 80 and 90 ticks in 30 minutes. Now, once the spread gets big, all systems will fail, because they can, the floor traders, the market makers, can hit your stops at either end of that spread without recording an actual trade. So it's one of the vital things that we need from our market creators, our trading platforms, is that not only are the spreads reasonable, but that they keep them fairly constant. And we found PFG are the best at doing that. I have no association with PFG. They don't pay me anything. They don't say any nice things about me. So we picked them simply because we found them to be have the best product available for our clients. If you'd like a practice account, also talk to Jerry about that. He can set you up with a practice account. I do recommend very, very strongly that when you start trading this stuff, you do it on a practice account. Make all the errors and mistakes that everyone makes, but do it on practice money. Do not use real money until you're confident that you can emulate the Danielcode results, please. What broker do I use? You'll see on our website that on the right-hand side is underneath the Trade Navigator link is the link to Striker. That's Striker Securities, our licensed brokers in Chicago. Jerry Winter is the vice president. Jerry's been my personal broker for many, many years. I know a lot of brokers. Jerry's one who does a good job, and he's particularly knowledgeable about the Danielcode because he's done the tutorial several times. So if you want to talk to a broker, I suggest that you can talk to Jerry. He's a very nice guy, and he will try and help you in any way he can. Mike says, do I just stay online here, or is a different web address? Not quite sure what he meant there. Okay, I think we've done all this. Yeah, Neil, hi mate, how are you? Good to see you here. We've got a lot of Danielcode guys here, naturally. Okay, someone understands Forex, blah, blah. Only trading account is practical considering all costs of doing business. Well, I agree with that. I don't know if that, what kind of risk for a $5,000 Forex only trading account is practical? Well, If you've got a $5,000 account and you're trading this stuff the way we do properly, you would expect to have your 7% plus return a month. So on $5,000, you'd be making about $350 a month, and then you have to pay our fees, and then you also have to pay fees to your data supplier. So 5,000 will cut it, but it's fairly marginal. I'd be happy to see a bit more than that, 10,000, 8,000, 10,000. So pretty good. Okay, folks, look, I think that's all we've got for today. Thank you so much for your time and your attendance. We'll have the next webinar in a fortnight, and we will be talking there specifically, I imagine, about the Auto Trade Genie, but do get on to Jerry or Dan at that phone number I gave you and talk to them about your membership of the Danielcode and how we can assist you to get started with whatever is required. If you, for existing members, you guys remember to talk to Terry about any problems you're having with the website or your access. Thank you for your attendance very much, ladies and gentlemen, and I bid you a pleasant evening.